Hey everybody, Kyle Sasser here, and this is Great Homes Tampa Bay, and it's everybody's favorite time. That's right, market statistics time. So this is for Pinellas County for July 2020. And you might be asking yourself, Kyle, it is August. Why are we looking at the July numbers? And the reason why, because it does take about 30 days for the local realtor boards to get the information together and compiled into this lovely report. Watch some of the previous episodes. You'll know we had a little bit of a shakeup with the pandemic and all of that. The overall trend is continuing, but there has been some interesting changes that I will definitely be sure to point out as we go through these numbers. So the first thing to remember with these reports is that they are compared year over year, not month to month. So that means we are comparing July 2019 to July 2020. And we do that because during the course of a year, just month to month, there's a natural ebb and flow to the real estate market. Here in Florida, we really seem to follow the school schedule. So around the time that school starts and ends, the number of houses sold kind of drops a little bit. If we were up north, it would be a little bit more obvious because people don't really buy houses when there's a lot of snow on the ground. So we do compare year over year. So these numbers are July 2020 versus July 2019. So trends the previous month has been constricting inventory, and that overall market trend continues to this day. Now, we do have a few bright spots here and there, but overall, as a buyer, you still are having difficulty finding a lot of homes to choose from. It's just a natural consequence of where we're at in the market right now. So just going to get started here on Pinellas County. So the number of closed sales has actually gone up compared to last year. There was 8% more homes sold than July 2019, and we're currently at 1,402 sales. Median sales price is up 13.3% to $308,000, and average sales price is up 11% to $400,711. Now, those are some pretty big jumps. Anytime anything is over like 1, 2, 3%, it's definitely something to take notice of. And these being in the double digits definitely means that there has been a spike in prices compared to last year. And if you're in the market looking to buy or sell currently, you know that that is 100%. That is 100% the case. Dollar volume jumped 20%. So the total dollar amount of all homes sold jumped 19.9% to $461.8 million. That is over $500 million in real estate and that's just single family homes. That's not all real estate. So just single family homes, there was over $500 million sold in just 1 month. That number always blows my mind. Median time to contract has dropped from 28 days to 18 days, and that is because there's just not a lot of stuff on the market. So stuff pops up for sale, and it's literally gone within 2 or 3 days. And even the median time to sale, which is a little different than median time to contract. So median time to sale is basically how long a house is on the market before it actually closes, and that's dropped 14.3% to 60 days. The two big metrics to keep an eye on is going to be the ones pertaining to inventory. So that's going to be the number of new listings, as well as the total number of active listings on the market. So for July 2020, compared to July 2019, the number of new listings went down 3.5% to 1,286 units. Now, that's actually a little bit better. That is a little bit better than it was a few months ago, because a few months ago we were down significant numbers. And that is backed up in the daily statistics that I still have been compiling, which I'll go over a little bit later in the video. And then the total number of active listings. So this one's the doozy. This is really the one that is basically the crux of all of the current market conditions. Total active inventory has gone down 43.6% so last year there was 2,929 homes for sale. And this year, there are 1,653 homes for sale. I don't really care what metric you are. A drop in 43% is going to have a huge impact on the market. So when you hear people talking about, man, things are coming up on the market, they're going up for sale, and they're going under contract quick. This is why you literally have just a backlog of buyers who are struggling to find houses. And the result is that home prices are going up, which we're seeing in the median and average sales price climbing. And honestly, it's going to take a while for this to correct itself. There has been some bright spots in the daily numbers, which I'll get to, like I mentioned. If you're looking to buy it, it's going to be a little bit of time to find the right house and to get an offer accepted and to anticipate having other offers on the table. Now, I do think it's important to break some of these numbers out into the various price points because the market is a little bit different depending upon which segment of the market you're looking in. For obvious reasons, a house that is priced at $950,000 is going to sell in a little bit different time frame than a house that's priced for, say, $350,000. The interesting thing that I see here on the number of new listings is that there's actually a divide between homes $250,000 and less and ones that are priced above $250,000. So the number of new listings under 250, all of those have actually gone down. So there's fewer number of homes being put up for sale under 250 than last year. But above 250, there's actually more homes being put up for sale compared to last year. So you need a little bit of a divining rod to kind of figure out what exactly that means in the grand context. Other than, obviously, if you're looking to buy under $250,000, you're going to have a much harder time of it this year compared to last year. But to me, how I interpret these numbers is that the market has basically moved north with the price points. Sellers are, in current market conditions, expecting their homes to sell for more money. And that's why, basically, across the board, there has been double-digit change in the number of new listings. And again, some of them, there's quite a bit more. Like if you're looking to buy a $1 million house, there are 31% more this year than there were last year. But if you're looking to buy a $150,000 to $200,000 home, then there's 42.3% fewer homes for sale now than compared to last year. So you can see where that can become difficult. Most of the other numbers are within 10, 12%. So for example, $200,000 to $250,000 is down 12.4% to 211 units. And then $250,000 to $300,000, which is where we see the number rising a little bit, that is at 11.9%. So there's about 12% more homes in that price point that have been put up for sale this year compared to last year. Then we come to the total inventory broken down by price point. And basically all of those are down a crazy amount. Basically 50% if you just want to ballpark it. Every price point, there's about 50% fewer houses for sale this year compared to last year. I'll just run through them real quick. So $100,000 to $150,000, there are 55.1% fewer houses. $150,000 to $200,000, there's 50.4 fewer houses. $200,000 to $250,000, there are 53.0 fewer houses. $250,000 to $300,000, there is 46.8% fewer houses, and on and on and on. $400,000 to $600,000, there's 41.2% fewer houses. It's crazy. That is a crazy section of this report. But again, that does just reinforce why the market is moving so fast now, because you have so many buyers who are itching to purchase a house, and there's nothing out there for them to buy. And if you do want a copy of this report, you can follow the link below in the description section. And I'm happy to send these reports to you as they come out. It'll drop in your email so you can follow along. The last page here is what I like to call the doom and gloom page. So this is where we talk about foreclosures, bank-owned properties, and short sales. So if you remember, you probably saw the news stories where the state has basically shut down evictions, foreclosures, and all that stuff. So I'm still, just like previous months, I am taking these numbers with a very large grain of salt. Basically, we can't with any certainty say where these numbers should be because they're artificially being kept in check because they're just not allowing short sales or because they're not allowing foreclosures. So number of foreclosures is down 63% to 7, and the number of short sales is down 25% to 6. Again, huge grain of salt with that. Honestly, we're just going to have to wait and see how all that shakes out. I feel like we're probably going to see a spike in foreclosures and short sales as that part of the pandemic package kind of gets relaxed and those are allowed to go through again. But yeah. So I wanted to go over this and give you an update on my little spreadsheet here. So if you remember, it takes like 30 days for the MLS to get the sales report data together and then out to us. And I definitely wanted a little bit faster information, so I can probably advise my clients on, the status of the market and what we're doing, and also kind of gauge if the market is improving or if there's a continued shrinking in inventory. Now, the overall trend since the pandemic started has been fewer homes for sale. Reason why is obvious. People naturally, in any sort of crisis, they naturally just want to hunker down. They don't want to make any changes. And in this instance, we have a lot of folks here that do not feel comfortable exposing themselves to, possible infection due to health risks to themselves. Completely understandable. But I wanted to actually know how many of those people there are. So what I would do is I would go to the MLS and I would pull every day how many new listings were being put up for sale and how those compared to previous years. Because we always need to know relatively how we're doing. Like the numbers by themselves don't really give us any information, because it's like, how many new listings were there today? There's 80. It's like, okay, well, is that good or is that bad? Like, who knows? But by comparing them to previous years, we can see what the trend is. If I scroll down here, you can see I went back, 15 years here and got the basic information for where all the levels were. Currently, I'm only going back 2 years. So, all that explanation aside, you're probably just wanting to know currently. Most recent date I have here is August 21st. That's when I'm recording this. So for the last 7 days, we had 727 listings, and compared to the previous week, we had 784. So that is a 7.27 decrease in the number of listings. And monthly is where things start to get interesting. So 2 or 3 months ago, we were 30 to 40% down. So there was 30 to 40% fewer homes being listed, which is why those current inventory numbers are so crazy low. Currently, compared to last month, we're actually up 1.39%, which again, not a major number. And these numbers are for the entire Tampa Bay area. So this is both Tampa and Pinellas, because my initial research showed that the trend held for both. So I've just been following combined and did both counties. Now, what we really want to look at here is we want to look at previous year comparison, which is going to be this little section right here. A few months ago, this was 40%, 30% fewer homes being put up for sale. Currently, in the last 2 weeks, we're only down 1.4% versus last year, and we're down 8.7% for 2 years ago in 2018. That's actually pretty good. Our normal, the overarching trend for the last 5 or 6 years has been decreasing inventory. So these numbers across the years would be down, like 2%, 5%, 10%, something like that. So we're kind of back to where we would be historic, which is long-term good, but short-term, it's going to take a very long time for levels to reach back to where they should be, because this line is where I'm tracking the total change since the start of all this madness, all the way back in, we'll just say the end of February here. So I started tracking everything March 10th is when I started tracking everything. So from March 10th to now, we are still down 18.08% compared to 2019, and we're down 21% compared to 2018. So again, those numbers are up from where they were a few months ago. If you've watched the previous video, you'll see we were down like 30%, 40%, which is scary. But again, that shows up in the total number of inventory. So what I believe we should see is that the number of houses for sale should start to level out a little bit and hopefully come back a little bit. I know a lot of buyers are getting frustrated with the market currently, so we're probably going to have buyers start to drop out a little bit. So if you're thinking about selling, it is literally high time you would be hard pressed to find a better recipe for selling at a high price than this current time period. And if you watched the last video, I recommended it then too. I was like, this is a perfect storm to sell at crazy high prices. So, and that has been borne out. The thing you probably want to know more than anything else is how long are these conditions going to last? The honest answer is, unfortunately, I can't tell you, and I don't think anybody can. And if anyone tries, I think they're basically just making it up. So if you'd like me to make up something, you feel free to give me a call, and I'll just make something up and tell it to you. But the honest truth is that there is no knowing how long these market conditions are going to hold. Things that I kind of see, there's a big question about the impact of the pandemic on the overall economy. Jobless numbers have definitely been very high, but that impact has still yet to be seen. It might be relatively contained, depending upon the type of unemployment it is. So, like if it was primarily, like minimum. So if it was primarily like minimum wage or lower income folks that got laid off, that's probably not going to have as much impact on the housing numbers, just because they, traditionally they don't buy as many houses. But if that number gets big enough, it could have a pretty big impact on the economy. But that's going to be months and months and months and months down the road. And if you're, the main thing to me has been and always will be that if you're looking for a house for you yourself to live in, family, and to have enjoyment and peace in your days, that's money is not really the primary consideration to purchasing the home. You really need to just look and see and find the best house that you can on the market, and then basically just go for it. Because if you buy a house that you're in love with and that you're going to be happy in, I always think that works out a lot better than compromising and staying someplace that you're not really that excited about. Now, so far as these numbers go, if you're a seller, probably tremendous news. Your house is definitely not going to be for sale for very long, as long as it is priced appropriately and if it's in good condition. Because the other thing I've been noticing is buyers are especially with these top level prices, buyers are very hesitant to take on major projects. So if it needs major renovations or something like that, it does tend to still sell at the bottom of the price points. But the bottom of the price point has been, drug up a little bit, simply by the fact that the top end is now so much higher than it was even just a few months ago, to be honest. Once again, if you would like your own copy of these market statistics, I'll be happy to send them to you. Just fill out that sign up form down below. If you would like me to give you a professional valuation on your property, or if you would like me to assist you in buying a property, maybe you don't want to completely give away the farm and you would like to structure a offer in such a way where you're not just having to give away 10, 20, 30,000 above asking price just to get a house, please hit the contact form below. I'll be happy to help you out. And of course, if you have any other questions or anything, feel free to leave those in the comment down below, and I will be happy to address them. So thank you so much for tuning in. My name is Kyle Sasser. I'm a realtor with Keller Williams St. Pete, also a Tampa Bay native. Thank you so much for tuning in, and I'll talk to you soon.